Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, July 26th. Great to have you back with us once again. I'm your host, Jesse Allen. Thanks for joining us here. MarketTalkAg.com. That's our home on the web. MarketTalkAg.com. All of our social media links are there, our streaming sources, everything. It's available, a one-stop shop, MarketTalkAg.com. Well, as we work through our trading day here today, quartered soybeans found their way into plus territory as we climbed our way off the weakness of the early morning. Got plenty to talk about in regards to the markets. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here today. And Bryan, I appreciate you joining us once again on a Monday. Happy we're back on video this week. I know we were tied to the cell phone last week due to travel issues, but
right.
You know, looking at this market here today, it's a weather market. I think we've pretty much established that here in the last couple of weeks of trade. And I know some midday weather model runs may have given us a little bit more of a boost to pull grains, at least quarter beans, to the plus side here today. It seemed like right around that 11 o'clock, 11:30 window, 12 o'clock Central Time is when we really found some momentum to at least get us above unchanged today after some early weakness.
Yeah, right on. A couple of things. One is the market kind of had a rough morning and it went down to some support levels on charts and seemed to run out of selling interest. That's one, but you're right. The model started showing a little bit drier at the midday, and with temperatures again above normal all week, forecasted warm last week. You're just at a time of the year where the rubber hits the road. You need more than a forecast for rain. You need some moisture. So at least the market's kind of clawed back, went positive, finished in positive territory. Pretty rough Friday in the corn market as well. Pretty hard sell off. So a lot of volatility lately, but still that slant toward the idea that late July, boy, it's tough to get a rally started unless you get something to really kickstart it. And that's going to have to be weather because, Jesse, we're just lacking any other drivers right now. You can look at, the news that, hey, Brazil is importing some Argentine corn. Well, it's not really new news. It's been expected. It's reflective of tight inventory. Basis levels are reflective of tight inventory, but none of that is really new to, let's say, feed the bull or get somebody really excited saying, boy, I need to get some corn bought. It's just kind of a waiting game. There's a lot of looking out your backyard. I think the end users out there are looking out and saying, well, it's dry, but we see a crop coming and we've seen timely rains. And as an example, if we look at the drought monitor map, geez, the northern half of Iowa is just abnormally dry or in moderate drought or severe drought. And yet only 8% of the, or excuse me, I think it was 6% last week of the entire Iowa corn crop was rated poor to very poor. So the implication, of course, is that you've got a lot of corn that looks fair or good or excellent. And that's a function of timely rains, not necessarily lots of rain, just timely rains.
Well, and I know as well, we'll have our updated crop progress reports out this afternoon, 4 Eastern, 3 Central. And I'm curious to see if those reports pick up on any of this dryness that we've seen here the last week or so, Bryan. And it seems like the trade is expecting steady to maybe slightly lower in these crop ratings, but again, it's hard to say what we're going to see. You alluded to it. I mean, that Iowa crop, and I know Iowa's kind of that dividing line right now that a lot of people are starting to hone in on and watch, but it'll be interesting to see where those crop ratings fall this afternoon, Bryan.
Yeah, it wouldn't surprise me if they fall back some in the same areas we've been talking about and stay strong in Illinois, Indiana, Ohio. There's certainly a lot of talk. Well, some of these areas had too much rain. Some of the areas did. So I don't want to dismiss that. But usually when you have too much rain, a lot of areas benefit from it. So 2/3 of the crop will stay good. It's that time of year, though, where there isn't a farmer around that wouldn't probably tell you they could use another shot of rain or two. So a lot will depend on just this time period. This is where the rubber really does hit the road. Late July, August. Memories are short. Everybody remembers last year we got kind of flash drought, cut dry into August. Probably cost the crop 5% on yield, maybe 10%, somewhere in that category. Just depended where you were. So it's just really critical, especially the guys that are light in subsoil moisture. To the credit of the genetics and good farming practices, boy, we sure have talked to a lot of farmers that say, "Gosh, my stuff looks tough by midday or late day, but by morning, it looks pretty good." So corn goes from looking like onions and curling up and trying to tassel and pollinate to looking good in the morning. So that's good. And I even had one farmer. I want to believe him, but he just said, what's saving us is all the smoke. It's creating a haze. The sun just can't get down and beat on us like it would in a normal year, and that smoke is from the fires out west, of course.
And that's a great point that you make with all that smoke. I mean, we're seeing that smoke across the country in many spots, and that is a good point to make there. I'm curious your thoughts technically on some of these charts on the corn chart. We had a bad day Friday. We come back here with slight gains today. Seems like testing some of those levels and trying to fill some chart gaps and not really doing it. What are your thoughts? Are there some technical signals here throughout corn and soybeans as well? We've struggled with that $14 level. Are there any technical signals that are concerning to you or positive to you on the flip side?
Yeah, so last week December corn reached a high of 573 and a half, and the gap is 573 and a quarter. So technically it left the gap by a quarter of a cent or was a half, whatever the case was. It didn't fill it. And there's a gap down at 450 from back on March 31st. So when we start looking at these charts, there are some gaps, and gaps, I saw a lot of traders view. Eventually the market will try and fill those gaps. To not oversimplify it, but December corn since mid-April has every month traded either side of 550, and so it's been kind of a pivot point. Today's close 546 and 3/4. So we've been over $6 3 times, and we've gone down under 510 3 times, or close to 510. We had a low of $5.25 on May 26th, then a 514-ish area low, and then the low a couple of weeks ago there from 507. So it's range bound, and the range, but it's been, it quickly rallies and quickly falls apart, and it rallies on hot, dry, and seems to give it back on the first hint of somebody's rain forecast in almost any model. Could be the short term, but these, the 11 to 15-day models seem to have a real impact all of a sudden. It surprised me last week how soft the market was so late in the week based on longer range models. That gosh, when you're going into a weekend where you're going to kind of cook the crop at 100 degrees plus. So that's corn. Then if we jump over to soybeans and look at this November contract today finished, let's just call it 1358, kind of right in the middle of a range. The way some of us got the charts drawn, it did break an upward channel line late last week. Pretty rough morning, came right back, closed right at it again. So trying to hang in there. Got some critical moving averages holding above the 100-day moving average. If November beans, if they struggle with this dry weather, you've got this triangular formation that probably would suggest that they break out near the $14 mark. They're probably targeting 15 and a half. Now that's pretty strong and aggressive, but that's also within where the old crops have been this past year. So it's not like that's a some outrageous or new price. That would just be reflective of projected carryout. Right today, it's just hard for me to see how, Jesse, we get to that 51 yield. I know there's great beans out there, but you kind of need the entire Midwest clicking at 60% good to excellent. That to me isn't good enough to get the crop to a record yield level.
Well, and as well, looking on the soybean side, I know bean oil was pretty strong today. We got palm oil strong again, and so it seems like getting some support there. And on the weather side, we got a lot of bean crop in the northwestern corn belt, the northern plains, the Dakotas, and I mean they've been really cooking up there, and they're continuing to cook. And I've heard a lot of talk about corn, soybeans, not only spring wheat, but quarter soybeans as well up in the Dakotas that are are really in trouble up in that northern plains region, Brian.
We did talk to some people in northwest Minnesota last week, and they commented that one commented that he's connecting with some with a brother-in-law that runs a dairy that he hasn't done in 20 years, and that's chopped corn. He said, we're just that dry, so we're going to try and salvage corn that route. Had another one up in that same general area. He just said, this is our week and our weekend. If we don't get rain, get it soon, we're probably kind of done. We can't recover the crops. So yeah, it's going to probably get, unfortunately, easier to start downgrading the crop in those areas with conviction. Everybody worries in late May and then certainly mid-June, even late June and early July. But often if the crops can kind of hang on and get some moisture, they come back nicely. But for right now, it's, for lack of better words, it's getting real.
That's a good way to put it. On the wheat side, we saw some pressure there today. I'm going to be very curious to see that Wheat Quality Council tour and their reports out of the Dakotas here this week. North Dakota, they're looking at that spring wheat crop, and I have the gut feeling that they're going to be able to confirm as well for us on the spring wheat side just how much trouble that spring wheat crop is in. But again, I was a little surprised with the pressure in the wheat market today with that hot and dry forecast out there, Brian.
Yeah, and you got to wonder. I mean, the ratings are out there last week, and the spring wheat crop, for all practical purposes, it's terrible. Let's just call it like it is. It's a terrible crop. Forecasters last week and still appear to be earlier this week putting maybe some more moisture in the forecast for maybe some of the spring wheat in the Canadian province areas. But then you kind of becomes old news. It had such a strong, rapid rally that it settles off a little bit. People run their stops up. You get stop orders triggered. Market doesn't move in one direction every day. So right now it looks like just from my view, a correction on a chart that probably still moves higher. But attention will quickly, now that we're approaching the end of July, focus not only on our harvested results and spring wheat crop, but also what's happening elsewhere in the northern hemisphere, in particular what Ukraine, Russia. Take a harder look at those crops. There's been some dry weather concerns there too, that maybe that shifted toward the end of last week. But that's where focus will really lie on just, let's call it three areas. One, future weather. Two, harvest results. And then three, focus elsewhere in the world, exports, those type of things. The other thing to kind of keep in perspective is the dollar. It kind of consolidated last week, but at a higher level. It's as high as it's been since very early April. So that doesn't always bode well when the dollar's trending higher. Rarely do you kind of see all of a sudden wheat prices trend higher. They're usually the inverse of each other.
Brian, overall, looking at the markets here and just looking at trading philosophy and everything, working through this critical time period, any new advice or anything you want to reiterate for our grain farmers as they're looking at their marketing?
Gosh, both the bulls and bears have their arguments. Both are legitimate. Nobody should dismiss anything at this point. We've got tight enough inventory that even with average or better than average crops, we're still not going to pull ourselves out of this real tight inventory scenario. So the bulls really have an argument if this weather here, end of July, August in particular, that we're just right here. This is it. If that doesn't, come through, look out how fast this thing might get the fund money back into it. We were discussing here today a little bit historically. It kind of looks like 2011, a smaller crop. Funds started buying back into the market late July, and then it kind of took off in September. So once you start really getting a handle on the crop size. So the key is balance here. If you haven't made many cash sales and you can look out your back window and feel pretty confident, don't dismiss selling cash. The markets, they don't take any news to go down. They just can go down on their own. So make good cash sales, but you might want to cover them. So it's a balance. So cash sales, bull call spreads, call options. If you don't want to do that, cash sale, then you buy puts and put a floor in and leave top side open. So you keep this balancing act so you can participate if all of a sudden this thing decides in earnest to zoom higher, or the funds are just done. They start moving out. We get rain and we look back 30 days from now and go, well, that was, what it was. It was dry all spring. The timeliness of the rains was critical, and then we got a lot of rain. So you don't have to try and outguess this weather. So that's how I'd approach the grain markets. Think about the balance.
Bryan, let's flip over to cattle. Strong day in cattle
Yeah.
today. A very nice cattle on feed report and cattle inventory report on Friday afternoon, and that really gave us some momentum here in this cattle market. What are your thoughts on those reports and what we saw today?
Well, the reports probably were, I'm going to say spot on. Just when I always think with the cattle market, if you don't overthink it too hard, you got to think about common sense. High grain prices and drought conditions in cattle country, that's going to at some point tighten herd up, and that's going to be reflective in some report somewhere. But also common sense would just say, hey, look, you're also just looking at a tighter supply this year than last year. You got this backdrop of this post-COVID, and I know it's reared its head lately, but we had a big risk-off day last Monday in all the marketplaces, and the market shrugged it right off. And so you got your demand moving back into the cattle complex. So really impressive day. Today's just one of those days. If we're down this amount, it looks pretty soft. If you're up this amount, it's like, boy, yeah, this kind of reflects what we've been thinking could happen. The other thing too that I think is supportive here is this weather isn't great for weight gain. So you got the high temps, you got some humidity mix in here, maybe some of the smoke we talked about. This is not ideal. This isn't where you put the weight on cattle.
No, not at all. Not at all. On the hog side as well, Bryan, briefly, it was a quiet day today. It looked to me maybe a little consolidation in the market, but overall, not a terrible day in hogs, it seemed.
No, in October's, it made a nice run here. A solid $10 it picked up after a, big $20 drop. But so it's come back. We just hard to get too excited about the hogs. We expect further evidence in the months ahead or further numbers to show that the hog herd has expanded, that there's ample inventories, that we've kind of gotten behind the liquidation of the COVID window in early to mid 2020. Nice recovery overall. Just for me personally, just a little hard to get overly optimistic and you want to get too friendly the hog market right now. It just seems like the front months reflect the tighter supply, but as we get down the road, you can, if we get back above 90, we should really be looking at any of those deferred winter contracts as opportunities to take advantage of that.
Bryan, any thoughts on the dairy market here as we start the week?
Volatile, continue to look for rallies to be sold. Interesting day today. Of course, August is a summer month here, but 1660 up 13, but made a massive plunge 2 months ago, rallied back nicely, about $1.50 in August, and now slammed it back down last week. You had a production report that was negative again, over 2% more year to date. You had World Dairy auctions out of New Zealand there. That was negative again, showed increases. So that's an industry that's kind of suffering the effects of $20 plus milk. And that is when the market moves like that, you're going to get expansion, and that's what the herd's got. The back months aren't nearly as bad off as the front months, but they're on a very slippery slope. As an example, trading under $18 now in November milk. A month ago, we were trading closer to $19 or better. So we're losing that, but the trend of it is we've had rallies, but they don't last. So we're getting a series of lower highs and lower lows.
Bryan, as always, appreciate the insight. Any final thoughts for us before we run out of time on this Monday?
Yeah, I guess the final thoughts would be for the grain producer. Again, we talked about it before, just a real balanced approach there. Think strategically. It's not really a time of year to start taking some really big bets because this thing can really, move a lot. Just, think dollars per acre where we are. So if you've got good looking crop, really kind of think about that and how do you defend that. Long term, start thinking about that too into next year. We've seen December of 22 toying in that $5 on the futures mark often here in the last month. Today had a nice update, 498.5 up 7.25. So we're going to start watching those deferred month opportunities too. The old saying is bull markets have long tails. So why we like 550 this year, next year's $5. So we don't want that to turn to 4. So think about that. Think about a spectrum of sales. You hope your first are your worst. Average up, build a better price. All those good things that it's kind of like that old saying was, or whatever, everything I need to learn in kindergarten. It's kind of like marketing. Everything you need to know is just common sense. If you got good
Hmm.
prices, don't expect them to last forever. If they do, well, position so you can take advantage of it. But typically, if something's really good, somebody's making money, enough people will figure out how to get involved to take it away. So
That's great. A great way to wrap that up, I think, Brian. That's a good way to put it. And of course, if producers need a little advice, they could reach out to you and the team there at Total Farm Marketing. A simple phone call is always appreciated, isn't it?
it is. We'd love to field your calls. We've got a great team of advisors here. So if I'm not available, John's on your show. My son joined our team last December. Brandon, he sits next to me, so he's deep in the ditch with all of this as well, and very versed and licensed. So we're just good at trying to listen to farmers and kind of hear out how they're looking at things, and then maybe offer suggestions or thoughts for moving forward. And then we got a whole spectrum of services depending on how much level of service somebody wants. But the thing is to take action. Remember, no action is still a decision. It's still a strategy, still a plan. Usually that's the most riskiest. It pays the best dividends or the worst usually. So, if you don't like those extremes, then figure out how to harness it.
Very, very true. 800-334-9779. That's the number to call. TotalFarmMarketing.com, the website. Brian Doherty, appreciate the time on this Monday, my friend, and have a great week. We'll talk to you next week.
My pleasure. Thank you, Jesse. Take care.
Brian Doherty with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, July 26th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.